U.S. dollar CNH drops below 7.0500, lowest since October 2024. BBH. Euro steady in mid 1.17s ahead of ECB Thursday. Scotiabank. U.S. dollar. Canadian dollar remains heavy near 1.375. BBH.
Croatia inflation confirmed at 3.8%. Canadian dollar holds steady near Friday's close against U.S. dollar. Scotiabank.
CAC 40 records emphatic rebound.
India tightens checks on Russian oil imports. Volume set to drop. U.S. dollar to yen holds near 155 amid strong Tankan survey. BBH.
Good morning. Just going to have my morning snack and then we'll get on with it. We'll start before 9:30, don't you worry. Whoa. Prices just dropped. All right, almost done my snack. Hang on. Let me get some coffee down my throat. All right, guten Morgen. Welcome to Forex.Today, the YouTube community of more than 21,000 foreign exchange traders. We gather here today to conduct technical and fundamental analysis with the overriding goal of planning our trades in advance, because trading is risky, not
Pound edges
appropriate
up
for
ahead
everyone.
of busy UK data week. Scotiabank.
Do I have to start over again? Not appropriate for everyone. Past performance, good or bad, is not necessarily indicative of future results. Please stay small, stay humble, focus on the long term, and never risk money you cannot afford to lose. Yoo-hoo. Good to see you. Welcome to my home office. My name is Wayne. I will be your guide on this journey we call Forex. And so we'll do technical and fundamental analysis. I can cover gold, oil, Bitcoin, 10-year T-note. We can do day trading, swing trading, position trading. You tell me what you want to do. Wow, long day already. Cool. Hey, I didn't know this. Turns out after about, 3 minutes, it just drops the prices on this page. Interesting. I never spent 3 minutes on this page. But anyways, in the last 24 hours, the risk score has increased slightly to 3.55. Now it's even higher. Indicating risk on environment, this change is driven by fluctuations in the volatility index alongside movements in silver and gold prices, suggesting a higher willingness among investors to embrace riskier assets. Key indices like NASDAQ and S&P 500 reflected modest declines, typically seen in a transitioning sentiment amidst slight uncertainty. Look at that, the prices come back. Cool, let's get an update on the headlines.
Pound edges up ahead of busy UK data week. Scotiabank.
US dollar CNH drops below 7.0500, lowest since October 2024. BBH. Euro steady in mid 1.17s ahead of ECB Thursday. Scotiabank. US dollar Canadian dollar remains heavy near 1.375. BBH.
Croatia inflation confirmed at 3.8%. Canadian dollar holds steady near Friday's close against US dollar. Scotiabank.
CAC 40 records emphatic rebound.
India tightens checks on Russian oil imports. Volumes set to drop.
Cool. And you see euro dollar looks like a breakout pullback going on. What else is on the calendar today? Well, that's pretty much it. Pretty much it for today. New York Empire coming out negative. Canadian CPI 2.8 year over year. We'll go with the 2.2. Not bad. Not bad. And then tomorrow, Tuesday, is obviously non-farm payrolls. So hopefully you have signed up for the non-farm payrolls event. being held on the FX Street YouTube channel. Now, you're not going to find it on the YouTube channel. It's private, so you need to register. But most of you probably have already received invitations because you registered in the past. Cool. What else going on? Well, we got Bank of England, ECB, Bank of Japan. There's just a lot going on. We can get that from the news radar. It's just easier to see. Bank of England interest rate decision. That's Thursday. ECB interest rate decision. That's Thursday. Doesn't show it here, but somewhere in the week is, oh, here it is. Sorry. Bank of Japan interest rate decision. Thursday night, Friday morning, depending on where you are. So Thursday is a monster day. So how are the markets feeling right now? Well, after looking at 52 variables on 3 time frames, let's do some calculations here. And many calculations are being made. We're looking at, as you can see here, change in institutional positioning. That's our COT, volatility. Look at a lot of different things. And here's the history of the change in risk on sentiment. Okay, volatility up, NASI down, Nikkei down, yields are up, S&P down. And if you want the big, glorious answer, it's all written in plain English. Cool. So anyways, we're risk on. So now that we're at the stock market open, you could look to like buy a dip. You can check and say, well, what about scalping the indices? Or is there anything set up to resistance, down to support? Maybe a breakout. Okay, 4-hour S&P 500, but that is yucky. That's bearish, not bullish. And we have a bullish score on risk. So nothing kind of lines up at the moment. See how easy that is? How fast we can do that? Did I lose weight? Yes, I've lost 50 pounds in 2025. I mean, at first I went to my doctor and I said, Doctor, I'd like to lose 50 pounds of ugly fat. And he said, cut your head off. I thought that was rude. I mean, seriously. Pound Swissy, up, down. What do you think? Buy a dip, let her rip. Buy a dip, let her rip. Euro. Buy a dip, let her rip. Look at this. Pound dollar. Buy a dip, let it rip. Kiwi. Oh, not the same. USD Mexican peso. That's good. I'm looking to have it drop, but we're nowhere near the implied high. We're sort of on the moving average, so maybe. Okay. Wayne, please tell me about the yen. This week we have a Bank of Japan meeting, and I must pass the funded account. Well, if you don't know, then you're not going to pass. Come on, Mahai. Dude, they're going to raise interest rates. Okay. Let me answer it this way. And I discussed it already this morning at traders.com in great detail and furious anger. But it's really straightforward, Mahai. Come on. I want you to look at the inflation level of Japan and the current yields on the yield curve of Japanese government bonds. And you should be able to look at that and discern the answer that you need. In particular, the change over time. You know what I'm talking about? Yeah. So I'm sure you can figure it out. My job isn't to help you pass the funded account. But you should put two and two together and say, look at that. Huh? Look at that. What do you think? Like, okay, let's answer it a different way. Wayne, just tell me about the charts. Okay, that's easy. Do that all day long. Okay, well, let's look at Aussie yen. And let's see if we can discern what the rest of the market thinks. See, that's the cool thing about technical analysis. If you do it right, you're asking better questions like, how does the entire market seem to be pricing in the Bank of Japan meeting later this week? Oh, yen strength, yen strength, yen strength, yen strength, yen strength. Oh, well, that's easy. See how easy that was? I could burn through those pairs faster than you even launching your MT4 account. Bang, 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 easy. Now, all we see here is price and time, but it seems to be maybe they're assuming some sort of monetary policy reaction. But what I'm trying to tell you is what gets you to that point where monetary policy changes. And then more importantly, it's not the monetary policy change, it's the change in behavior by the investors, which I've already talked about a couple hours ago. Yeah. Also, 12/12 I predicted to be a key turning point in the market. Notice that we hit 12/12, meaning December 12th. And this up move on the hourly chart immediately turned into a down move. Cool. So anyways, Bitcoin recovering off that terrible, terrible drop. Crude oil. Oh, so easy. So easy. Gold. Look at that. Maybe a double top, huh? On that all-time high. But notice this is just implied volatility and some price action. We got way better charts than this, but this is good. Okay, are we going to double top on silver at the all-time high? Maybe. S&P 500 today, we're about to open. 12/12 had a collapse, which we talked about 1 year ago. And now Santa Claus rally? I don't know, maybe. We're riding the hourly 21. Okay? So this is a quick and dirty way of just burning through price action before you're even really interested in what to do today. You should already know, like, oh, the yen is strong. Oh. Wonder what that's about. Okay? By the way, every single tool you've seen so far is free. TRADARS.com, radars for traders. Totally free. You're my sweet baby. and I want to take care of you. Also, I promise you that if you sign up for free, you don't get put onto some sales email list, and I send you 3 or 4 emails a day trying to convince you to sign up for a premium. You get nothing. If you don't love it and don't want to upgrade, then don't. It would make no sense to me, but I'm not going to convince you. Cool. All right, let's get into it. We're going to go through some fundies now, and then we'll go into some proper technical analysis. So do you guys remember the day where I said, this is not technical analysis, this is just patterns? Oh, now I can, TRADARS does proper technical analysis for you. What do you guys think of that? Not this. I'll show you in a little bit. But TRADARS, let me make the announcement now, and then I'll repeat myself in a bit. TRADARS now does proper, full-on, multi-time frame, multi-strategy technical analysis using my moving averages, my oscillators, my pivot points, price action, and all the rules of engagement. And on top of that, understands all the macro fundamentals that go into it and can do it all on multiple time frames for you. Now, that ain't going to be free, baby, but we can do it. So anyways, this is our grid. These are the things that are, this is a combination of technicals and fundamentals. So you can see the stock markets are expected to cool off a little bit. Not all of them, but some. Kind of split in here. Well, this will change depending on if today is a good day in the stock market, then S&P will kind of move over. Just realize we're generally risk on, but check this out. There's still some caution and concern in some of the assets. But just so you know, it's not free and clear. But, dude, gold? Yeah, it'd be nice if we can get gold to make a higher high. Now, check this out. Let's just jump over to, because we can't spend 2 hours here. But let's do euro dollar. We have all the other pairs as well. Let me get a sip of coffee. It usually doesn't take this long. Let me do this. Let me kick it. Go back. Well, that's right. That's right. How come it's not loading? I haven't changed anything since an hour ago. Interesting. All right, let's do, and then do that, and then do that. I'm just trying to kick the database. Not sure why. Worked perfectly fine an hour ago. Oh, there we go. All right. We're looking at 2 different types of technical analysis, basically long-term, short-term, trend and momentum, if you will, speed and market, if you will. We're analyzing how this asset behaves in the current risk environment. COT, that's interesting. It was loading and now it's not loading. I noticed here. Okay, I can get that fixed. It was loading. Seasonality, we got priced in here. 7-day and 14-day targets, guys. I added a lot of new features over the weekend. 7-day and 14-day euro dollar projection. Oh, look at that. It says euro dollar, but that's not euro. Interesting. Because it's doing. So that's S&P, huh? No wonder it's got glitchy on me. Interesting. Malfunction at the junction. But anyways, that is a feature we've added. 7-day and 14-day projections. And remember, it's a combination, like the projections are 100% technical. And by technical, I even mean statistical. Oh, you're right. Gold. Gold. It was gold. So I don't know what's going on. That's interesting that all of a sudden, the last 24 hours is working. So I don't know why it's so slow. It wouldn't be me. It should be the server, unless all you guys are on the server at the same time and you're all pulling reports. But even then, we should be able to handle that properly. And anyways, we'll come back to it. Here's our new COT report. And this is as up to date as we can possibly get it based on the chunkiness that the government is releasing this data. And they're releasing it out of order and not all reports. So to get all this data that we have the position and the flow of everything. Everything that's reported. But they're not being released at the same time in the same order. And these assets are not all on the same CFTC report. So there's a level of complexity here that's unnecessary but true. Okay. And you can see, you're like, whoa, 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 what the heck is this? Well, that's the government shutdown. And I don't want to go back and say ignore this stuff, but in the future, we will just sort of work it out. So we're somewhere really in this zone. Okay, just connect this with this, and this drop is basically no data. And you're like, oh my god, COT dropped 60% for gold in 1 week. No. Now, when you go to a currency pair, then we have to analyze more than one thing. Okay. But so, anyways, this is the glitchiness of the government. This isn't us making a mistake. Okay. This is the demand. So, right now, the market, if you add up all the bulls and all the bears via the Commitment of Traders report at the Commodity Futures Trading Commission, so large institutional, and we're using the new model, which you're looking at asset managers, hedge fund managers, you're looking at pension funds, you're looking at insurance companies. We're looking at a much more sophisticated market. And when you add up all the longs and the shorts, all the bulls and the bears, there's a pretty reasonable size more bulls than bears on euro right now. But week over week, it's actually fallen a little bit. So we're long-term long, but short-term short for euro. Isn't that cool to be able to look at those things? Okay. And then when you combine the biggest movers to the biggest losers, what we're trying to do here is set up the best Forex pairs to say the strongest versus weakest will do best. And so we're going through all this entire COT report and then trying to just create the pairs for you. And so now you could say, oh, I'm going to go look at, Kiwi dollar. Okay. And it looks like a Kiwi dollar short, long dollar, short Kiwi. And okay. And here's the COT report for both. And you can see New Zealand is incomplete. Well, sort of a government problem, huh? Now you can hand create your own pair and say, what about Euro pound? Because I like to trade Euro pound. All right. Cool, huh? And then Aiden will explain what he sees. But check that out. Less euro, more pound. Huh? The market is more net long pound than it is euro. Now, what you want to do is find something very net long and combine it with something net short. So they're both net long because they're above the zero line, but there are less euro bulls and more British pound bulls. So now we can see all this visually and not just look at the candles. But of course, you can say, show me Forex only. Okay, the market is net short Kiwi, net long dollar. That's what I'm talking about. Kiwi dollar short. Crypto, stock indices, commodities, bonds. Now, this is important because this changes the shape of the yield curve, which in of itself is a potential risk on, risk off, or monetary policy signal. You're like, well, what do you mean, Wayne? This is what I mean. The red dotted line is where we were a month ago. Okay. Here's the change over the last 7 days. So we have a 30-day. Really, there's a hidden 7-day. And then our current. And you can see money's going in here and out of here. What does it mean? Risk on. It's part of our overall score, but this is weighted. But in of itself, just looking at the yield curve, you're like, wait, I don't understand this yield curve. What does that mean? Institutions are net short bonds, expecting yields to rise, combined with a bias for a steeper curve. This bear steepener setup is a classic pro-cyclical signal, indicating that smart money expects robust economic growth and potentially risk rising inflation. Capital is rotating out of defensive duration and into riskier assets. The overall bond market structure confirms a high conviction environment for risk taking. Holy schnicker schnocker. All of that from only reading for this score and that analysis is completely isolated to only looking at the yield curve, the shape of the yield curve, and the change in the slope of the yield curve and the flow of capital from one part of the yield curve to another. And so looking at the treasury market, which is way more, way more liquid or way deeper than the stock market ever could be. Aiden has analyzed all this for you like he's a bond and treasury trader, converting that into economic analysis. You're welcome. What do you guys think of that? Here's the other risk assets, and here's a breakdown of each component of the yield curve. Dude, shut the back door, huh? There's our seasonality. All right, who wants to do some technical analysis? Let's start with Forex. No. This one's glitching out too. You're kidding me, but I haven't changed it. Why would it glitch out? It worked an hour ago. I don't know how to kick this one. Nope. And it's glitching out. You are kidding me. Wonder if I can turn Forex off and turn it back on. Sorry, guys. New bug. Didn't exist earlier. I've never seen this bug. Okay. And now turn it back on. Sometimes I have to figure out what the bug is before I can fix the bug. You are killing me. Come on, Aiden. It's going to reload the whole site, though, isn't it? Yeah. We'll try one more time. If not, you'll have to be amazed at tomorrow's webinar over at FX Street. So again, you're going to need to register. Okay, that worked. Technicals. What? What? It doesn't work. Ah, interesting. Okay, interesting. So I'll get that fixed. It worked perfectly fine this morning. It's amazing, by the way, but you can't see it, so you have to take my word for it. Then let's move over. I don't know what changed. I think it's related to the price dropping. Remember, I was on the live market page, and after about 3 minutes, it would drop. Yeah, the pattern radar is working. Let me think this through here. So I was on the live market page, and it was live, and all the prices were working. And after about 3 minutes, it dropped. And then it seems to reconnect. So there's a timeout issue. But I think when it drops, it then kills the technical radar. So let me get to what I was wanting to show you. I'll just tell you. We now have a day trading radar. I guess I'll just pull them. A day trading radar that looks at the 15-minute candles and daily pivot points. We have a swing trading radar that looks at 4-hour candles and monthly pivots. Now, you say, well, Wayne, how come you're not using weekly pivots? The thing is, we are using weekly pivots. So when I go back, let me kick it up a notch. Back at day trading, we're looking for 15-minute charts using daily pivot points plotted on the chart. But then Aiden is looking at weekly pivot points too, and looking for places on the chart in which our daily pivots overlap with a weekly pivot, and he will tell you. Whoa, dude. And then when we are here doing 4-hour monthly, he's showing the charts with monthly pivot points based on the bias. So if we're biased, if we're bullish, it'll only show you the biased bullish pivots. If we're bearish, it'll only show you the bearish biased pivots, just like on our charts. But even though the monthly are plotted, he's also watching the weekly. And what is important to you is, where does the weekly overlap with the monthly? Then we go to position trading, and he's looking at daily candles, yearly pivot points. So now they're plotted, and he's looking for overlaps of the monthly. So he's looking for confluence areas of overlapping multi-time frame pivot points depending on your trading strategy. And it all looks like your charts on MT4, MT5 if you use my templates. And then this one, which will also not work, then looks for these three time frames to be lined up. And it'll tell you which ones are lined up on all three time frames. So it'll say, oh, look, euro dollar is bullish on the daily, weekly, and monthly. So maybe that leads to a better conviction. Yeah. So it's pretty neat. Too bad it don't work. All right. So taking a look at what we're doing here on the yen, these are looking for patterns. It's not considering fundamentals. It's not considering really technicals. It doesn't know anything about pivot points. It's only a pattern recognition tool, but you should know, like, this is a bearish pattern with a bearish opportunity. This is a bearish pattern with a bearish opportunity. Bearish pattern, bearish opportunity. Guess what? The yen seems to be strong. Okay, how about pig dollar, pig dog flat, Kiwi dollar flat. Okay, and I don't like these types of patterns, so I'm going to turn them off right now. I don't like them. I don't like them. I don't want that. That's fine. That's fine. I don't need that. I don't need that. Good. So now I've simplified my life even more. Okay, bearish opportunity, bearish opportunity, bearish opportunity, bullish opportunity. Be careful in Euro CAD. Slight bearish opportunity, but be careful on the higher time frame. So I'll probably just pass, and I'll probably pass there. Same thing, Euro CAD. Slightly bullish opportunity on Euro CAD, but with that there, I'll pass on that. Pound Aussie, yeah, I'm bullish with an opportunity. Buy a dip off that moving average. That's fine. Euro CAD, I've already passed. Aussie dollar pass. It's consolidation. Aussie Kiwi consolidation. Pound yen breakout, pullback. That's interesting. Sell it off 208. Check out the yen strength there. Same thing here. Yen strength there. So far, all the yens look strong. Right, Mahai? Euro CAD, bearish with a threat, pass. Aussie dollar, not today, but maybe buy a dip later, so pass. And Gartley is a reversal to the up, not today, pass. Pound, Euro pound, interesting. Maybe a change. I'm going to be on hold here and pass. Done. I just did the entire Forex market. And you can do that for crypto, stocks, commodity, indices, and more. So now I got to figure out why this doesn't load, but I do believe it's related to the price glitch, which means I fix one thing and multiple things end up working. I wonder if I can do it here while I'm alive. While I'm alive. No. Maybe this one. Let's see what Aiden thinks. Pretty excited about the bond radar. It's quite good. Another thing I've kind of cleaned up and verified the econ data. We've added timestamps to things, and you'll see like that seems old, but that's the recent data. Okay, this is the recent data reported on the 2nd, but it's for the October. It's a real, how do you say, Shiite show with this government reporting data. But anyways, we'll get all that. It's organized and I like the layouts and all that kind of stuff. And then now it's just some cleaning and some polishing. But it looks like the hard work is done on most things. Oh man. I just want to show you the quick and dirty, like part of your routine is logging in and just showing you like the biggest winners and losers. So it looks like Bitcoin is really, it's gone from a loser to a winner. It's still below 90,000. Oh my gosh. But it was way worse. I think it was like 87,000. I'd like it to be 97,000. So anyways, there's some gain there. Gold is trying its best. And flat. Yeah, wow. Flat, flat, flat. So which prices are not coming in? So some crypto prices are not coming in. Look, it cheated. It only cheated here, but it didn't cheat. Oh, it cheated here. I yelled at Aiden over this. So what he's done is he doesn't have an S&P 500 price. So he's pulled an ETF, and I've yelled at him, you're not allowed to do that. So I have to be able to catch that. It's kind of interesting. So some of the prices are not coming in, and that's glitching things. Nikkei 0, FTSE 0, copper 0, wheat 0, corn 0. Okay, so that's part of the issue, and I'll get that fixed. And that part of the issue, I believe, is what's mucking up our technical analysis, because would you agree it's difficult to do technical analysis without price? And I think it's saying, hey, pull me the recent price, because it's doing a couple of things. It's doing the chart analysis, but it's trying to organize it by best opportunity. But it can't figure out what the price is right this second because of that other price feed. And so it doesn't know how to organize it, and therefore it just has a brain fart. Cool. I'll get that fixed today. Luckily, it worked this morning at the internal webinar at traders.com this morning. Worked great. Beautiful. Cool. So I have to kick the price feed and try to figure out why it's not pulling. And once I get that, boom, 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 boom. Okay, this should all work. Cool. It's good stuff, though, isn't it? I love it. Makes me so happy. Look at that. Gorgeous. And it glitched. Oh, it's back. Okay, good. Hey, look. Look. Here's where we are in the development. The heavy work is done. I built it. It's great. It's incredibly big and incredibly incredibly intelligent. So Aiden truly understands macroeconomic analysis, technical analysis, and how to combine the two. And he thinks the way I do. So now the stuff that I'm doing with Aiden is incredibly, what was the word I used earlier? Finesse. The 95% of the time this doesn't happen, but it's happening now. Let me tell you how to handle it, kind of stuff. And so now I'm taking a trader with 10 years experience, but I have 20 years of experience. And now I'm teaching them those, little one-offs. But the infrastructure is built, and now I'm just at the point where, as of today, there's a couple of little things to iron out, but we're done. Like now we're just ironing out some wrinkles, and fully functional, unbelievably amazing technology. Oh my God, I'm so happy with this. So moving into 2026, there's just straight up going to be awesome. So now we're analyzing market sentiment, market fundamentals, and market technicals, not just patterns, but proper technical analysis. All to help you get organized before you even open up your charts. Yeah. So I'll see you tomorrow at the FX Street live stream for Trade Non-Farm Payrolls Live 1 billion. Cool. You know what that dotted line? That's what we projected into the future. Yeah. So, okay, this collapse was unusual, but not unexpected. And then we expected one here, but we didn't get that. But the rest is pretty gosh darn good, I think. So I'll just leave you here with that. Did you know Ripple tends to fall in December? Oh, you didn't? The average return is negative 14%. So if you know, it's normal. If you don't know, you'll hear things on TV like, oh, did you see what Trump said about crypto? That's why it fell. Look at this, Solana is typically down almost 2% every December on average. So it's not something that somebody said. That's just perfectly right as rain. So anyways, remember most of these features, everything here on the sentiment tab is free for everybody forever. Okay. It's a freemium model, so you get most of it for free. And if you want more analysis, more AI, more personal attention through live coaching, then it's costs a little bit of money. But this free subscription is worth more than $100 a month in my mind. I mean, a lot more. So read my open letter. Look at this. It moves. It moves. Yeah. Okay. Oh, that's not. That's interesting. Don't click that button. I know that's not going to work. Okay. I'll fix that. Cool. So, anyways, it's legit. I'm telling you. We have something now that radically will change the way you trade. Not just a data dump, but actual strategies that you can understand and have confidence in. Peace on earth.